Namaskar dosto. Welcome back to this new episode on fundamental stock analysis. Hope you and your near and dear ones are safe and healthy. Friends, my name is Milind, and if you have not subscribed to my channel yet, please do it right away so that you can keep getting notifications on various companies that I will be covering in future. Today, the company that we are going to talk about is one of the jewel in the Tata group of companies. Yes, friends, I am talking about Titan Company Limited. So let's see what is there in the magic box today. We will talk about the company, its product and services. We will talk about company's moat and future growth levers. We will also talk about the weaknesses and challenges that company may face in the short term as well as the long term. Then we will see the company's financials and key ratios, and towards the end we will do a SWOT analysis and we will see if the company is worth an investment. So let's start with company's product and services. Titan company was incorporated in 1984 as a joint venture between the Tata Group and Tamil Nadu Industrial Development Corporation Limited. Both the Tata Group and TIDCO hold about 25% and 28% respectively of Titan's equity shares. And friends, as you all might be knowing, the legendary investor, the Warren Buffett of India, Mr. Rakesh Jhunjhunwala owns more than 5% of equity stake in Titan Group. And we all know Titan is a market leader in watches and branded jewelry. It has four verticals: jewelry, watches, eyewear and fragrances and tanneria. Tata has recently ventured into tanneria in last couple of years, and it is a traditional, it's a kind of a sari shop that tanneria operates in. Jewelry segment is the major revenue generator and it contributes 88% of the total revenue, and it commands 6% of the total gold and studded diamond organized market share in India. And friends, you can see this screen. These are various products and services that company caters to. In mass market, it has Sonata, which is a watch. In the mid market, it has Titan Fast Track. In the premium market, it has Nebula. In the jewelry segment, Tanishq is the well-known brand in the mid market as well as the premium segments. In the eyewear segments, it has Fast Track, Titan Eye Plus. So you must have heard and came across these various brands that Titan company caters to, and each of its brand has its unique position in the market and they are leading in their respective categories in the market, and this is the strong moat for the Titan. So let's talk about the company moat. Yes, it has the leadership position in its core business segments, both jewelry and watches. Strong brand recall, healthy store additions. Titan is adding approximately 40 to 50 stores per year. And the biggest moat, association of trust with Tata brand, pan India distribution network. It has thrust on wedding space, and wedding jewelry is becoming a critical growth driver. So friends, these are various moats for the company. So just to recall, it has 6% jewelry market share in the organized market, healthy operating efficiency, strong financial risk profile. It is the fifth largest watchmaker globally, and it has given a robust financial performance in challenging times, which reaffirms the thesis of long-term market share gains for the Titan. Let's talk about the future growth lever. Titan is now catering to the international destinations and it is planning to open around 20 jewelry stores in international destinations. It is looking to cater to NRI and Indian origin populations in regions like UAE, US and Canada. And these international destinations will fetch higher ticket size for Titan. What are the other growth levers? Rising of upper middle class, leveraging digital technologies, consolidation into organized segments. Friends, Titan is targeting to increase its market share from 6% to 10% in another 4 years, and it is going to leverage the digital technologies and rising upper middle class with the disposable incomes will aid these future growth levers for the Titan. Let's see what are the weaknesses or concerns. Titan is exposed to competition from unorganized players in the jewelry division. So that is the first weakness. In future, if there are any lockdowns or the volatility that has created because of the current situation between Russia and Ukraine and which may induce the market volatility, that needs to be washed out. And regulatory risks. The jewelry division is highly susceptible to regulatory risks and any future regulation in future, if it is negative to the jewelry division, these needs to be washed out. So these are certain weaknesses and concerns for the Titan. Let's talk about the financials now. Between March 16 to March 21, Titan's operating revenue has increased at the CAGR of 14%. Its revenue was 11,267 crores in March 16, which has increased to 21,644 crores in March 21. And friends, not to forget that the FY21 was kind of a washout for at least 6 months because of the prolonged lockdowns that were induced to contain the pandemic. And despite of this, Titan is able to maintain its operating revenue growth. Let's talk about operating profit. Operating profit has increased at the rate of 13% and the operating profit margin is in the range of 10% to 12%. It dropped to 8% in March 21 because of drop in the revenues, because of the lockdowns and because of the fixed cost the company has to incur even though the shops were closed. In terms of the net profit, company's net profit has increased at the rate of 8% CAGR between FY16 to FY21 and the net profit margin for the company is in the range of 7% and the company's net profit has increased from 675 crores to 973 crores in March 21. So, robust revenue growth, robust profit growth both on the operating as well as net profit do signify the strength of the Titan in its jewelry and watch segment. Let's talk about the balance sheet strength. ROE for the Titan typically ranges between 20% to 23%. It dropped in 13% again in March 21, but which was again an exception because of the lockdowns. So ROE above 20% is a good number. Let's talk about the free cash flow. Titan is able to generate free cash flow and it was able to generate free cash flow of approximately 4,000 crores in March 21. So on the balance sheet strength, Titan is again having a good strengths both on the free cash flow as well as on the return on equity. Let's talk about the key ratios. The current market price of the Titan is around rupees 2,500 and friends, it should be noted that despite of the volatility that the market is witnessing for last couple of months and the recent volatility because of the situation between the Ukraine and Russia, the stock price of Titan is still holding up. The market cap is 220,000 crores, which is a large cap company. Its current PE is 99. Again, PE looks high because of the reduced revenue in FY21. Once the revenue and operating profit is back to the pre-pandemic levels, the PE should fall into its median PE. The 5-year PEG is 12.95 and the 5-year stock price CAGR is 42%. Friends, Titan stock has given 42% returns in last 5 years, which is phenomenal. Very few companies in the large cap space can give this kind of return. Promoter holding is around 53%. There is no promoter pledge. Operating margin is around 8%. Net profit margin is around 5%. Debt to equity ratio is 0.85. ROE for FY21 was around 13, but as I stated, the average, the median ROE for Titan ranges between about 20%. And the dividend yield for the Titan is 0.16%. So this is how the financials of Titans are looking like. Now we are coming towards the end of this episode, and let's do a quick SWOT analysis. So on the strength, market leader in watches and branded jewelry, strong brand recall. On the weakness front, it is a part of consumer discretionary spending section, and hence any negative impact in the market that can affect consumer spending, discretionary spending, needs to be washed out for Titan. Opportunity, rising of upper middle class with the disposable incomes and international destinations with higher ticket size. These are the future opportunities for Titan. Threat, Titan is susceptible to regulatory risk in the jewelry division as well as exposure to the competition from unorganized players. So friends, this is how the SWOT analysis for the Titan looks like. So, $1 million question, is company worth an investment? Should you invest? So friends, as usual, my recommendation goes like this. You need to study the annual reports. You need to attend the conference calls. You need to assess your financial risk, your financial profile. You need to assess your financial goals and then make your own narrative and then take a call on investment. You have to do all these homeworks if you want to become a successful investor in the market. As far as Titan, share of the Titan goes, friends, my take is that this is the company that is must in your portfolio, and you should keep accumulating this stock on every dips, and you should have this stock in your portfolio for at least next 5, 7, 10 years. So friends, with this we come to the end of this episode. Thanks for watching my episode. Please like this video, subscribe to my channel and have happy investing. Thank you.